So what is a REIT? A lot of people associate REIT with very large publicly traded real estate funds, but a REIT is really just a set of tax rules that apply to real estate ownership that meet a very set of certain criteria. And it arrived, all of our long-term rentals are REITs. And REITs have a few tax advantages. Again, we have to comply with some rules first. We have to have at least 100 shareholders. We have to have a certain percentage of our assets in real estate, which we do. All of our assets are pretty much in real estate. All of our income has to come from real estate, which we do because we're operating these as long-term rentals. And we have to distribute our income to our investors, which we do because that is our business plan. And as a result, we do get some tax advantages. So again, a REIT is a special type of corporation for tax purposes. And what we're allowed to do, unlike other corporations, is we are allowed to pass through all of the income to our investors. So instead of paying tax at a corporate level and then a different tax to our investors, we get to pass all of the income all the way through. Now, one of the biggest benefits is on capital gains. And we're going to hold our properties for a certain period of time. And when we sell them, we are actually allowed to pass capital gains to our investors. And as most people know, capital gains are taxed at a much lower rate than rental income and ordinary income, interest, earned income. Most of the other kinds of income out there are taxed at a much higher rate than capital gains. And we expect a lot of our overall returns from our investments to be in the form of capital gains. So the fact that we're allowed to do that, again, is a huge advantage of a REIT. There is one more thing. There were some special tax laws passed a few years ago that are in effect through 2025. And REITs get what it turns out to be a 20% discount on the income. So if you make $100, you're really only going to pay tax on $80. So that's something that we're certainly taking advantage of as long as that law is in effect. There is one more advantage of a REIT from a state tax point of view, and this helps a lot of people just from complexity. Because if you bought a property in another state or you invested in an LLC in another state and you had income, you might have a filing requirement. You might have to pay income tax in that other state. With a REIT, all the taxes due are based on where you, the investor, live, where you file your taxes. So if you're in California and buy properties in all 49 other states, you don't have to worry about filing in those 49 other states. So just again, especially because it arrived, we encourage making diversified investments and investing across lots of properties. The fact that you don't have to worry about the state taxes takes away one of the big barriers of doing that otherwise.